the most easiest and most powerful ICT concept: open, low, high, low, close, open, high, low, close, right? This is the most powerful ICT concept that has ever given to the public. It still has more, but it's not public yet. But this right now is the most powerful because this is basically CRT, right? And as you guys know, I only teach stuff that I know that I use, right? So let's go into an example of open, high, low, close and give you guys the reasoning and some tips and tricks with it and how to use it on live market data. So market opens, before getting too deep, with the first focus on things. If you guys don't get this video, rewatch it. Rewatch it until your brain second nature, whatever that shit is called, second guess, I don't know, right? So market opens this price. There's the opening price. Then market eventually gonna go. If it's bearish, right? If it's gonna be a bearish candle, market opens. Market creates a high of the candle, gives you some sort of entry over here. So this right over here, this zone right over here. This zone right over here would be your entry. Somewhere over here would be your entry. You tap into it. So let's just say tap into a order block, push down, market creates a low. Market, goes a little bit up over here and closes, right? Market opens, creates a low, gives you some sort of entry around here, creates a high, and closes, right? Market can do some retracement over here, eventually close up back, right? Do some sort of retracement to the fair value gap and close over there, right? Same with the next candle, and on and on and on and on until sometimes, right? So now let's go over how and why is this the most powerful ICT concept and the most easiest. Excuse me. How is this the most powerful concept? It's simply because it could help you determine what's next on the market, what should likely happen to next, determine the next drone liquidity, determine the drone liquidity. So what's next or what's the next drone liquidity? They're basically the same thing. And this other word you could say, it could help you get in trades that are in a discount area rather than being a premium. So if you're buys, you want to buy on a discount. If you're sales, you want to sell on a premium, right? So it gives you cheaper price entries. And you guys know what a discount is, right? You guys should all know what a discount and premium is. You guys don't know how to use it and you're a dumbass, because what is a discount and premium? Helps you get a tighter stop loss rather than get on wide stop loss and make you less money, right? That's the simplest thing. So that right there, I just told you guys everything of it, the definition of it and everything. Now, how can you use it on market data? And by the way, you do not want to use this on a random ass time, random ass candle. It has to be a specific candle, a specific time. It cannot be a random candle. And I suggest you guys don't use it. Do not use it in a lower time frame. Do not use it in the anything below the 15-minute time frame. You should not be using it. Only the higher time frame, right? Like hourly, 4-hour, daily. I like to use mine on a 4-hour time frame, and the lower time frame I like to get execution on it. So I'll just go through it, right? So now let's go to a chart example of open, high, low, close. Now let's go to the 4-hour time frame. Both of this. So you guys already saw that. If you guys don't get it, rewatch it. Very simple, right? Now we go to the real-time data example. Perfect example was today. What happened today? Market opened, close up, created the high, cleared the low, and closed. And this is still not closed yet, by the way. Still have an hour 20 minutes. So yeah. And how can you predetermine? The most confusing question to people is, how can I know that this is going to be this candle is going to be the top of the candle and where the market will not go higher? The simplest answer to that is your entry criteria. What are you looking for to entering, right? So if the market opens, goes up, right? If the market opens and goes up, and once you're looking for entry, then how do you know we're gonna be high, right? How do you know that market might go up higher from here, right? Market might go from this candle might go up higher, right? All the way over here. How do you know that you'll be the top of the candle and not go any higher? simply entries, your execution criteria. So what are you looking for to entering, right, in the lower time frame? So if using the 4 hour open high low close, open low high close, you're gonna be looking for 15-minute entries, 5-minute entries, depending on whatever time frame. The time frame, if you go to my time frame alignment, you're gonna find that out easily, right? And one thing is, these could definitely get SMT'd, right? SMT correlated pair, one pair swoops out the highs and one pair doesn't. And one thing you want to be really careful with, you want to usually match this up with a key level, PD array, building block, whatever, right? You want to match it up with each other. Why? It helps you better rather than just guessing some random help and high low close. You want to have a key level. This now is certain. So market, go to the key level, right? I don't have to draw this. Go to the key level, right? Gives us an entry, right? It gives you some sort of entry, goes up, gives you entry, right? Failure swing, market is super as high. Whether our other pair didn't, market goes back down, right? And there's a key level over here. Boom, test that fair value gap, test the key level. Now once the market touches the key level, you enter out of there, right? So open high. If you want to enter it here, you would have kind of stopped out, right? Open, if you enter some here, boom, at enter out the breakout structure, order block, you would have gotten stopped out. Market goes up, hits a key level. Think about it. Hits a key level, gives you another way of entering, another order block, boom, entry to the downside. Now market goes down here, goes up, then goes down. Then, let's just say it's a higher time frame, market goes back up and closes, right? There's a low, that is a high, open, high, low, close. Simple. And as I said, all the criteria, I'm not gonna repeat myself too many times because I don't want to make this too long. But how can you use the live data? So all you gotta do is go to the chart, go to the chart, right? So today data, I'm using the 4-hour open high low close. Market open at 9 a.m. The 9 a.m. candle open right here. Now I'm looking to sell above the opening price. So I'm going to the 15-minute time frame to determine the open high low close, So now I'm gonna go to 15 time frame. Now see market open over here. Now market went above its opening price. Oh shit. Went above its opening price. Now over here, we're looking for a tap into a key level or a existing entry, right? So over here we got an SMT with a different pair. Right over here, if you go to the 4-hour time frame, as well. This one swoop up the high, while this one didn't. This is the 4-hour SMT, by the way, so looking for 15 time frame. Market open, tap to a key level. What's our key level? This right over here is model 1, because swoop model 1, and this is a different range as well. So tap into it. So market tap into a key level. Now what's next for the market to go down, right? What's next? Market opened, create the high. Now we have our entry. How do we have our entry? We have our entry criteria, right? Our entry criteria is the model 1. You can see soup, model 1, entry there. Well, I'll wait for for this kind of the close, then decide, right? But market never touched it. But regardless, open, touch the key level. Now we got our entry criteria, enter out of that, boom. Now we're expecting lower prices. Why we're expecting lower prices? Because market opened, created the high. We got our entry criteria. The most important part is the entry criteria. I don't know what you're looking for. If you're looking for unicorn model, look for it. If you're looking for model 1, if you're looking for fair value gaps, everything, we must have concepts. So we already have our entry criteria. So now I believe that this should be the top. Market should not go up high from here because I have my entry criteria. Now market is telling me that once you have your entry criteria, that means market should not be respecting that entry criteria, right? So market should be just pushing down from it, right? So yeah, because that's your entry criteria, right? So when you have the entry criteria, that means market should not be going against you no more, right? Should be just repeating. The hitter should repeat and go with you and hit your TP, right? But losses are definitely part of the game. So now we determined that this is going to be the high, and we're now expecting lower prices, and when the market do push down, easiest concept. Thank you for watching. Open, low, high, low, close. The most powerful concept is to help you determine what's next, what's the next round liquidity, and what should not be going. And yeah, always have a execution entry for it to predetermine the open, high, low, close. Thank you for watching. Open, high, low, close, open, low, high, low, close.